I'm going to start out by introducing myself. I'm the sponsor, or my law firm is the sponsor for this event. My name is Christina Davidow, and the law firm is Willis and Davidow, and we focus on closing deals with foreign buyers and sellers. We close all of them, but my most favorite ones are those that are a little bit more challenging, those that have a few more issues, and those that require different types of procedures. What do we do differently? We have different timelines. So we kind of dial everything back a little bit more so that we have enough time to get documents to Europe, back and forth, anything that we need. We deal with wire instructions a little bit differently. We deal with communication a little differently. And we have contacts with translators and a lot of other stuff that you don't normally need. So if anybody needs anything from me, let me know. I'm happy to help. And now, the event that everybody's been wanting to see is BJ Cottrell from the FIRPTA group. And BJ asked me if I would introduce him. And I said, you? I don't know you. I don't know what to say. Which is not true at all, because BJ and I have presented together in the past. And I don't know anybody as passionate as I am for everything foreign as BJ. He knows a lot. He enjoys the subject matter. And I think he's great to be here today to teach you about FIRPTA.
All right, so thank you, Christina. For everyone in here, Christina does an amazing job. There are a handful of attorneys and title companies around here that work well with foreigners. Christina's group is definitely one of them. She does a great job when we work with her clients. We know that that side is going to do things well. And trust me, I've dealt with a lot of attorneys that is not the case, okay? We've had a lot of title firms and a lot of attorneys that do not know what they're doing with FIRPTA. And although we try to educate them and try to help them, at the end of the day, some of the stuff is their requirements. And if they don't do it right, it can drastically cause issues for either delay, penalties, interest, a whole bunch of other things. So if you're going to work within this market and you're going to sell or have buyers and sellers that are foreign, make sure that you put together a good team. That includes tax people like myself, that includes attorneys, that includes bankers, that includes different people. So you want to make sure that you have a good team. And like I said, Christina is one of the best ones here in town as well. So, all right, so let's go ahead and go into this. So today we're going to be talking about FIRPTA. So we've put this class together. Oh, I'm sorry. Before I do that, I need to do some chair work. So I'm also the chair of the global committee, okay? We're the ones that put on all of these events and do all these educations around global stuff. And one of the things that we have coming up is the CIPS Institute. In the center of your table, all of you guys will find these flyers, okay? What is the CIPS designation? It's Certified International Property Specialist. This is where you can go and get it, not only just letters behind your name, but they're also going to give you information, whether it's ethical information, whether it's legal information, whether it's just things on how to deal with foreigners from feng shui and personalities and what different things are. A lot of good information for this, and again, it's also something that you can market to your foreign buyers and sellers that you actually are a certified international property specialist. So we are doing this in August. The spaces are going to go quickly, so I definitely suggest that if you're interested in getting this designation, to definitely sign up for these classes. They do a really good job, guys, of keeping this really cheap. It's $150 for this, okay? It's an in-person class here in Naples, and it's only $150. So if you guys are interested, I would definitely suggest signing up for that. Okay, so why are we doing this class, okay? The reason why we're doing this is Florida, especially Southwest Florida, has a large volume of foreign buyers and sellers, okay? Now, I am not being lazy here. I have left the statistical data from 2018, or it's really 2019 on here. The reason why I've done that is because we have had 2 to 3 of the weirdest years ever, right? With COVID and stuff. We had a surge in sales, then we had a drop off for foreigner sales. We have prices increasing and everything else. So I want to give you kind of more of a general idea of what the statistics were consistently at versus them going up and down during COVID time. So you can see here in the August 18 through July 19, there was foreign buyers made up 12% of the dollars of all homes purchased in Florida. That's huge, guys. I mean, that is absolutely a gigantic number. Now, one of the reasons for this is because of numbers. There's no question there's a lot of number of buyers, but also the average house for a foreigner is much higher. Now, Naples is unique because we have a lot of high houses to start with, but the average home for a foreigner is, I think, somewhere around 25% higher than the average purchase for a U.S. resident. So not only do they, are there a lot of people buying here, there's also people buying at higher dollar ranges. You can see here also from from the dollar standpoint, and it shows here, the dollar standpoint, you're at 12%. The actual number of houses is 9%, okay? So you can see there's a huge dollar amount. Now, who are the top buyers? Top buyers, obviously, is Canada. No question asked, throughout all Florida, especially Southwest Florida, Canada is by far the number one set of people that come here and buy. But we also have Brazil, Argentina, Venezuela, and Colombia as well to round out the top 5. There's also this statistic that's in your guys' handout as well. All of this, guys, is in your handout as well. But I love this chart. It kind of shows the breakdown, and it does it between Cape Coral and Fort Myers versus Naples and Marco, which, the Cape has things a little differently than Florida, but you can still see here that the Canadians are by far the largest. And then you'll see that Cape Coral jumps to Germany, okay, as number 2. And I say it's Cape Coral, it's really Fort Myers, Cape Coral, but actually Cape Coral has a huge population of Germans that move there. You'll find that even within communities, right, you'll have a good subset of Canadians because, when they come down, especially if they have friends, family, or anything else, they all want to live near each other. So you'll see certain communities will have higher dollar amounts, certain cities will have higher ones. I mean, obviously we have Michigan and things like that people move down from. Same thing with foreigners as well. And then I went ahead and put the link down there. NAR actually does this study and comes out with it every year. So if you want to stay on top of it, if you want to kind of take a look at it, there's a link there so that you can do so. All right, so when we get into FIRPTA and we talk about FIRPTA and foreign stuff, the first thing that we need to talk about is ITIN, okay? ITIN is Individual Taxpayer Identification Number. What that is basically a social security number for a foreigner, okay? And just so you guys know, it always starts with a 9. Okay, so when I'm teaching this class for title companies or law firms, I always let them know that it always starts with a 9. So if they ever get any information and they put social security number or anything like that there, or identification number, it starts with 9, that should be a big red flag to go ahead and be like, okay, listen, you're probably a foreigner. There's some different things that we're going to have to do and deal with. So that's what an ITIN is. Now, who has to get an ITIN? You have to get an ITIN number if you are required to file a tax return, if you need to complete what's called a W-8 ECI, which we'll talk about here later. If you sell a property in the United States, you have to get an ITIN number in order to report the sale. And then last, if you have any other withholding requirements. Some of those might be getting an interest-bearing U.S. account, okay? Most Canadians, most foreigners don't get interest-bearing, so they don't have to deal with this. But if they did get an interest-bearing one, they would do that. If for some reason they're able to get a mortgage here in the United States, they have to report the interest, so you have to get an ITIN. So there's a couple other weird situations in which you would need an ITIN, but for most of the time in our conversation, it's for when we're selling a home. Right? We're selling a home in order to, not to sell the home, because we can go through the whole process of selling the home, but in order for them to file a tax return and report the sale of the home, or for them to send money to the IRS through FIRPTA withholding or withholding certificate, the first thing they have to deal with is making sure that we get an ITIN number. Okay? Okay, so how do we get this ITIN number? Oh, just as a side note too, when they purchase a home, there is no need for an ITIN number. Even more so when they purchase the home, they don't have a reason to get an ITIN number. So I have a lot of foreigners that when they buy the house, they're like, I just want to get the ITIN now. I want to get it done and over with. Unfortunately, we can't do that unless there's a reason to get the ITIN. Now, if they're renting the property, they're going to have to report that income and expenses, so that's one of the reasons. Again, bank interest and some other things we've done in the past to kind of get around that, but we can't get it at the beginning. The other thing is, a couple years ago, 4 or 5 years ago, they started making you have to renew ITIN numbers. So where before they lasted pretty much forever, now if you don't file a tax return or do anything with it for 3 years, it gets inactivated and then you have to renew it. So another reason why when they purchase, it's not a good time for them to get it unless they need it. All right, so how do we get an ITIN? The first thing we have to do, we have to fill out a W-7. That is the IRS form to actually apply for the ITIN. It is not the most difficult form in the world to do, but it is riddled with little mistakes that you can do nonstop. I cannot tell you how many times I have clients try to do this themselves just for me to have to redo it at some point in time because it never ends up going through. We've been doing this for over almost 15 years now. I know all the different things that we have to do. Heck, I have the FIRPTA department on speed dial in case I need to call them for different issues and stuff. So it's not the most complicated, but it does have a bunch of little nuances to it. We also have to have a reason, what we just talked about. You have to have a reason why you're getting it. And then the third one is you have to prove your identity, okay? You have to prove you are who you are, okay? And that's the most difficult one. There are some other identification forms, but 99.9% of the time, they'll use their passport. That is the one form that can meet all the requirements. So you need to use your passport to prove your identity. Now, here's the problem. In order for the IRS to approve that, you have to do one of three things. Number one, you can send your passport to the IRS. They will authenticate it and then mail you back your passport. If I find out that any of you in here do that, I will haunt you in your sleep. Do not send the IRS, especially right now, someone's actual passport, okay? That is a terrible idea. Do not do it. And so we definitely don't want to do that. It's a non-starter, especially with COVID still having delays and everything else. It will be forever before they get it back and they won't be able to travel. The second option is you can actually go to an IRS center. Okay, the closest one is in Fort Myers. There's also one over on the East Coast. At this place, your client can take in the passport, and the IRS agent there will actually authenticate the passport right then and there, and they sign a document called a COA, and then they can submit the W-7 with that. It's an option. We don't like it. One, because you're requiring your client to go there. Two, it feels like a DMV, long lines, and we've even heard of people being in line for 2 hours and at 5 o'clock they shut the doors. Whether you were in line or not, they kick you out and you have to start the process all over again. So although it is an option, it's not a great option. The third option is to use a CAA or a Certified Acceptance Agent, okay? That is someone like myself who has been fingerprinted and has the authority by the IRS to be able to authenticate passports for clients. So we have a client come in, I fill out the W-7. At the end, I have to actually meet the individual in person, and I have to see their passport. I authenticate the passport, I take a picture of it, and I sign a document saying that I attest that it is accurate and that this person matches. That is the simplest thing to do. All of my agents, I always tell them, if you get a listing appointment, okay, for a foreigner, and you've got that deal, make sure to call me and bring them in. Let me explain to them what FIRPTA is, what's going on, or any other tax professional that specializes in this, and let them go ahead and take a picture of the passport right then and there. Everything else we can do remote, okay? We can have signatures done remote, we can do everything else. It's that one piece that is a little bit more complicated. Now, if we don't happen to meet in person and they leave before we get a chance to, there is one other option for the CAAs, and that is that they can get an actual certified copy of the passport, okay? Now, that is not a notarized copy, right? We used to be able to do notarized copies. This is an authorized copy. That means they actually have to go to the issuing agency, basically the Social Security Administration in their foreign country, and they have to get, it's normally stamped and sealed, an actual certified copy. Then I can do a Skype or Zoom meeting with them. When I have the certified copy in my hand, we can do a Zoom meeting, and then at that point I can authenticate the passport and we can send everything in, okay? So it's not the end of the world except for the fact that they've, again, got to go to a government agency, so we can avoid all that if you meet with somebody before they leave, because I would say 95% of the time the clients aren't, they've already left by the time the house is sold and gone back to the foreign country. Also, guys, we have kind of a medium group here, so if you guys have any questions as I go through this, make sure to raise your hand, and I'll go ahead and answer it as we go through this. Okay, so now, next thing we need to talk about. So ITINs, right, we've talked about that. Next thing we need to talk about is who is a resident versus a non-resident, okay? So by default, if you are not a U.S. citizen, okay, by default you are a non-resident, okay, except if you meet one of the two conditions below, okay. First one is the green card, okay, the green card test. So if for whatever reason a foreigner has come to this country, they have applied for a green card, they can then have the rights to work in the United States. They are not a citizen, but they have the rights to work in the United States. 99% of the time they get Social Security numbers at this point in time, and then they actually work and they file a U.S. tax return every year. This is not a non-resident alien. This is a resident alien. They are not a citizen, okay, but they are a resident alien. They are not subject to FIRPTA. Okay, so you'll find this a lot of times where you'll have a title company or law firm, they'll think that, or even the individual, that if they're not a citizen, that they're subject to FIRPTA. That's not the case. If they are a resident alien or they have a green card, they are not subject to FIRPTA. Yes?
Okay. I had a case recently where I had to research, I read all the IRS documentation, and it stated that if you didn't have the actual green card, the application didn't make you a resident alien. You had to have the actual green card. Is that correct?
You're saying that the application does not qualify as that. That's an interesting one. We're getting a little bit more into immigration, but I would say that if they have not received the green card, that they would still be considered a non-resident alien. Now, there's another way you can be a resident alien, but in your specific situation, I would agree that until they actually get the green card, they have not met that usage yet.
Mine is similar. I had a client, he worked at US at one point and had a green card, but now he's been living in France for like 15 years, and he didn't even know where his green card was.
Sure.
So is he a resident or not?
Non-resident, right? So he doesn't have an active green card and he's not been living in the United States, okay? So, and I don't even think the green card is technically active because they go inactive, right? Huh? Yeah, so yeah, there's a certain period of time and when it goes away. So,
I also believe that when you are living outside of the United States, you have to come in every 6 months.
in order to keep the green card, yeah. We're getting a little bit more into immigration, right? Type of stuff, which I can talk somewhat about, but not really intelligently. But my understanding is that there's certain requirements to keep your green card active, which is being in the United States for a certain period of time, as well as after a certain amount of years, you have to renew it, period. Okay? All right. And I'm going to get to the practical aspect of that in a second too as well. So the next thing is, okay, so the next thing is the presence test, okay? So the way the IRS law reads by default is you have to be, if you're in the United States for more than 183 days, okay, or 183 or more days, that you are considered a resident alien. You're not a non-resident anymore, you're now a resident alien, okay? Now, the way the IRS does this though is really, really strange, okay? Because the way you come up with the 183 days is a 3-part test over 3 years, okay? So what it states is that you have to be in the United States to start with 31 days in the current year, okay? Then it goes to this 183-day test that says it's 100% of the current year, it's 1/3 of the days the year before, and then it's 1/6 of the days the year before that in order to calculate to 183, okay? Absolutely crazy. So what we've done is we've created what I like to call the safe harbor rule, okay? So the safe harbor rule basically says, if I do this calculation of current days and everything else, what's the maximum number of days I can stay in the United States every single year without getting in trouble with the IRS? And that number is 121 days. So you can see the math up here. If you did 121 days every single year, the total days counted would be 182 in this thing. Now, I'm surprised I have not seen a hand raised already because this is not the practicality of what most people do. This is the law, okay? The practicality is this, is that if a foreigner wants to stay here under 6 months, right? 180, under the 183 days, but over the 121. Let's say they want to stay here on 180 days every single year. That's higher than that 121. That means that they'd become a resident alien, unless they file this IRS form every year. and the IRS Form 8840, which is a closer connection to the foreign country that they live in, okay? It's a very simple form. It's very straightforward. It basically just says that, hey, my driver's license is in Canada, my health insurance is in Canada, my banks are in there, my retirement, all these different check boxes, pretty straightforward of saying that I have a closer connection to Canada than I do to the United States. Therefore, I want to keep my status, I guess, for lack of better words, of being a non-resident alien. Okay? Now, if they stay here 180 days, 180 days, 180 days, right? Because all the Canadians, most foreigners, it's always under 6 months, right? They say, if I'm less than half the year, I can stay here. That is accurate, but only accurate if you're filing this form. Okay? Now, let me tell you guys, we do FIRPTA deals, right? We do tax returns for FIRPTA, for foreigners, right? And one of the things on the tax returns, we have to show how many days of the year they were in the United States. I do not ask my clients very often. I have them verify it's correct, but I normally don't ask them. I can actually go to a website by the government, and as long as I have their ITIN number and their birth date, I can search and see all the days they came in and all the days they came out. So the IRS knows, right? The more we're doing this, the more things get regulated, the more the IRS knows about this. So we're finding some clients having some issues with this, not filing this form properly and not filing it every year and getting stuck where they're getting a resident status instead of a non-resident status. All right, now why is this important? Reason why this is important is taxes. If you are a resident alien, you have to file a U.S. tax return and show all your worldwide income. Now, you tell me one Canadian that comes down here for 6 months of the year that wants to do that, right? One European, it's not what anybody wants to do. It's absolutely not. You're filing a 1040, and there's all sorts of rules and regulations for it. You have to show all your income everywhere. And report everything. Heck, in theory, you pay taxes on all of it. Now, you get credits from the home country and stuff like that that ends up washing, but you're still reporting it. And nobody likes Big Brother, right? So no one wants the IRS to know what's going on with their stuff, especially a foreigner that doesn't want to mucky up the waters. So by staying under the 183 days and filing the closer connection form, you can avoid this and not have to worry about it. But a lot of people are not filing that form each year because they don't realize that they have to do it. Non-resident aliens, those are the ones that I like the most, those are who we work with the most, they only have to file a 1040 NR, or non-resident tax return, and they only show income that's derived from the United States. So if they have a rental property, they file a 1040, but it's only for the rental income and expenses for that property, okay? Or that stuff in the United States. If they, do something small and make some money doing something else, we put that on there as well, but it's only income from the United States. All right, any questions? All right, let's move on. Okay, so let's talk about rental. So it was really exciting for us in our firm, and we have, I'd say we probably have about 80 clients of ours that do rentals every year. But right before COVID hit, we were actually seeing a lot of Canadians, and actually younger Canadians, right? 30s, 40s type of thing, not the retirees that we're used to, coming down here and buying property as investment more so than as second homes. Now they'd still come down and they'd stay for a week or two here and there, but they have full-time jobs, they can't spend a long period of time. So they were buying it, doing VRBO, doing different rental type of stuff, short-term rentals, so that they could pay the expenses for their property, but still have a vacation place to go as well. Obviously, we've seen that all slow down with COVID, and also with inflation and everything, things have kind of paused a little bit. But I'm assuming that we're going to see this again, which is foreign investors coming in and buying rental properties. So when they do that, it's really nice because they get to write off the carrying costs, right? Assuming that they're renting it full time, they get to write off all the carrying costs. That means electric, that means water, that means taxes. If they can get a mortgage interest, insurance, HOA fees. And then what's really nice is even travel. So if they travel here to the United States and they can show that the travel was to maintain the property, was to do some little fixes in the property to make sure everything looked good, all that type of stuff, and the primary purpose was to maintain the property, their investment property, they can write off all that trip as an expense. Okay? So we normally find that foreigners that rent property, well, just in general, when you normally rent a property on paper, you get to show a loss with the IRS. But for them, especially with all these extra expenses and travel, they can normally show a loss, which they can accrue, and it keeps rolling forward so that when they eventually go to sell the property, it reduces the capital gains that they have to pay because they've been able to accrue those losses all that time. So we're finding a lot of people doing this. It's a really great thing to do. I think that, we're going to see it probably reemerge next year or maybe the year after that at a high volume. So if you have clients that want to rent, you can let them know that there's a lot of tax advantages. There's some stuff that they can do from that standpoint. Yes, Brett.
BJ, are you getting people going back now because of the appreciation of housing over the last 3 or 4 years going back and spending about now I want to?
So we get clients, it's normally not that as much as either A, they just didn't want to, or B, they didn't know any better, right? They started renting and they heard about Collier County, right? We've got, now there's all sorts of rules, right? Now you have to register your VRB, your short-term rentals, and you've got to get inspections and all this type of stuff. But you definitely have to pay the tourist tax, right? And the sales tax. So they normally set that up, but they don't realize or think about the fact that they actually have to do tax returns. And technically, if they show losses, they don't have to, but normally you normally have to do it. So what we find is that before we do, right when we find out that they're closing on a property, we're like, listen, if we get you caught up with tax returns, you're going to have losses that carry forward. And instead of you paying $10,000 in taxes to the IRS when you sell the property, you're only going to pay $4,000. And so we definitely find that filing tax returns for foreigners definitely helps them with their capital gains at the end of the year, 9 out of 10 times. Yes, Sam?
You get depreciation if you're foreign?
You do. You get depreciation as well. So I don't put that on there, but depreciation, you're forced to take depreciation over 27 and a half years, so that becomes an expense. It reduces your basis, but it becomes an expense for that current year to either A, offset the income that you've derived for the rental property in that year, or B, if there's not enough income, it creates that loss that carries forward as well. I think I saw another hand, yes? They are, correct. Yes, they are. Yeah. Basically what happens is this, guys, outside of standard deduction, which foreigners can't take, everything else when it comes to rental properties, a foreigner can take. There's no difference whatsoever. It acts the same as a U.S. resident as well. We'll talk about capital gains, which is a little different, but everything when it comes to income and expenses is the same. Now, one of the things that's interesting about foreigners renting property. So when we talk about FIRPTA in this class, we're talking about FIRPTA, which basically goes to selling of a property. But really FIRPTA, the Tax Act, the Foreign Investment and Real Tax Act, Real Property Tax Act, it covers a whole bunch of things, including things like ownership and partnerships. It includes a whole bunch of other income and different things for foreigners, one of which is rental properties. So in the definition of FIRPTA, if you receive rental income, it is technically subject to a 30% withholding, okay? Now, funny part about FIRPTA, which we're gonna get into more when we show you selling the house, it is the buyer, okay, who is responsible for it, or the actual renter that is responsible for it. Now, tell me how this works. I am a foreigner. You're renting a property from me. How in the world are you supposed to know that 30% is supposed to be withheld, right? It just doesn't happen. The only time we really see this come up is when there is a actual management company. And all the management companies do know that they have to withhold. And there's a whole form that they got to fill out to do the withholding and everything else. Now, there's an easy way around this, okay? And the easy way around this is to fill out the W-8ECI, okay? This is a document that we can fill out, okay, and on behalf of the foreigners, and we can hand that document to the management company and say, here, we are treating this as a business, therefore the withholding requirement does not count here, okay? We don't have to withhold, and it's as simple as that. Now, the problem is you have to have an ITIN number, okay, and you have to know about this form to fill it out. A lot of times people just don't know. So, whoever's the management company withholds the 30%, and the foreigner just doesn't even know that this is an option to do this form. Very simple, doesn't go to the IRS, just goes to the thing. It's a very unique, weird thing that the IRS has done, but it's a very simple fix. So if you ever have a foreigner that's buying and renting, you just know that there's a way of getting around that withholding. And like I said, it's pretty simple. We apply for an ITIN, fill out this document, and we give it to the management company. Okay, so now we're to the FIRPTA. Okay, so definition of FIRPTA, right? We talked about this just a minute ago. It's the IRS's regulation that allows the United States to tax foreign sellers on dispositions of U.S. real property. The current rate is 15%. If you've been in this game for a long time, it used to be 10%. It jumped up to 15% in 2016. So using some very rough math as an example, if a foreigner sells their home for $1 million, the IRS is going to withhold $150,000, okay, in order to make sure that they pay their tax. Now, this is very important. I can't tell you, I scream this from the mountaintops. I will forevermore. This is a withholding. It is not a tax. Okay? You get a lot of foreigners that read about this 15%, and then it's on the gross price too, right? It's not on the profit, right? This person could have bought this property for $1.5 million and sold it for $1 million, right? Not in today's market, but it could happen, right? So it's based on the gross, regardless of whether or not there's profit or not. So you get foreigners that just read this 15% and don't understand it's a withholding, that it's actually, they believe it's a tax. So they believe that they're going to pay, if they sell their home, they're going to pay $150,000 in tax. We need to get rid of that methodology, and we're going to show some real numbers for you guys here in a little bit. But you've just got to let them know it is not a tax, it is just a withholding. Yes?
Okay, so that's flat 15 now. Did it used to be tiered?
Oh, I'm going to show you. There's exceptions to the rule, which I'll go over in this next slide. But I just want to make sure that everyone realizes this is not a tax. This is a withholding. And where this is really important is when you go on listing appointments for foreigners, right? And FIRPTA comes up. You need to let them know that they're doing, because a lot of people, they come here, they buy a 2-bedroom apartment, right, and stay a year or two, and now they want to upgrade, or now they're moving down here full time and they want to sell. If they think they're going to pay $150,000 of actual tax, it's going to slow them down from pulling the trigger to move, and that's a possible loss of 2 closings for you, right? The sale of the one apartment and the buying of the next one. So we want to make sure to educate them on the fact that it is not a tax, just withholding. So there are a couple ways to reduce the withholding, okay, the 15%, okay? And the first one is if it is under $300,000, okay? Well, the first option is using the buyer's affidavit, okay? This is a very sensitive topic because I've heard people deal with this in a million different ways, and I've dealt with attorneys that have taken very strict interpretations of this IRS code, okay? The way the IRS code states is that you must have definite plans to reside in the property for at least 50% of the number of days the property was used by any person during the first 2 years. When counting the number of days the property is being used, do not count the days the property will be vacant, okay? So this is the problem I have all the time. We want the buyer to sign the buyer's affidavit, okay? And they're like, well, I'm not going to stay there 50% of the time. We only stay there 3 months out of the year. Well, that's fine. If you stay there 3 months out of the year and you're the only one that stays there, you are staying there 100% of the time that it's being occupied. Okay, so that's the first thing that we see happen all the time, okay? The second one is well, I am going to rent it a little bit. During season, I may rent it for like 3 months, and then we're going to come down during off season. Well, that's fine. As long as you stay there, it's rented for 3 months, you stay here for 4 months, you're still over that 50% thing. And then the second one that I have a lot of times is I'll have attorneys and or the clients that don't want to sign it, period, because it says that I have to do it for the next 2 years, okay? The way the IRS code reads is that you have to have definite plans upon signing, not plans afterwards. Plans can change. 2 days later, you can change your plans and start renting the property, and you still meet the IRS code. Okay? You have to have plans when you sign. Now, what does that mean? Number one, they cannot open up an LLC, right, before they sign and put it into an LLC. That is showing the IRS that most likely you are putting it in there for rental purposes stuff. But you could have maybe thought you were going to rent it for 3 months and stay in there 5 months. So there's even a way to get around that. So there's a lot of different things, but nevertheless, the buyer's affidavit is an important part in reducing the federal FIRPTA withholding. And the reason why is because if the property is under $300,000, so you have a seller and they are selling their property for $275,000, and the buyer signs the buyer's affidavit saying that they're going to reside in the property for more than 50% of the time that it is used, then the withholding goes down to 0. There is no FIRPTA withholding, okay? Now, the foreigner still has a requirement to file a tax return at the end of the year and show what the gain was, because they could have bought it for, $100,000 and they're selling it for $275,000, they still technically have a gain. But from the IRS standpoint, they say we won't force you to actually withhold 15%. Then, if it is over $300,000 but under $1 million, and the buyer signed the FIRPTA affidavit, the buyer's affidavit, then it gets reduced down to 10%. Okay? Now, I know a lot of real estate agents that actually put this into the contract. Okay? There's an addendum that says that the buyer has to sign the buyer's affidavit and different things like that, so that you can force it. Now, depending on what the market looks like, right now, or it has been very, very strong, very much so a seller's market. You can basically dictate whatever you want. No inspections, no this. I mean, you could dictate anything. But in other times, when you're trying to bring in the most amount of buyers possible, and get the highest price possible, this may be a no-go. Okay? So, but there's that option. And then if it's over $1 million, it doesn't matter. You're going to pay 15%. And if it's under $300,000 or anywhere in between, they don't sign the buyer's affidavit. It's also a default of 15%. Yes?
Let me go back to the 300 and under money. So even if they sign, because it says for buyer's affidavit, even if they sign the buyer's affidavit, you still have to collect the 10%.
No. If it's under $300,000 and the buyer sign, it's 0%.
Right.
300 to $1 million. If the buyer sign, all it does is reduce it down 5%. You still have to withhold 10%. Yes.
What is the reduced amount if they sign the buyer's affidavit for the seller?
What do you mean the reduced amount?
You said the buyer signed this affidavit, so the seller's withholding will be reduced.
Right. So if it's under $300,000 and the buyer signs it, it's 0%. There is no withholding at all. If it's between $300,000 and $1 million, it goes from 15% down to 10%. Over $1 million, it's 15% no matter what. There is no buyer's affidavit clause at all. It is 15% period the second you step over $1 million. Okay?
And what if they won't, if the buyer won't sign that?
And so we run into this all the time, right? You have an attorney that doesn't want them to sign it, they don't want to sign it, whatever. And unfortunately, there's nothing you can do except for make it a requirement when you do the initial listing type of thing. And let me tell you this, guys, all the time, the people will tell you verbally that they're going to sign the affidavit, and then by the time closing happens 3 days before, you think they're going to withhold 10%, and all of a sudden it turns to 15 because they've decided not to sign it. Okay? So it happens a lot. Okay? But nevertheless, again, we're getting back to this. It's a withholding, not a tax. Now, don't get me wrong. The IRS is going to hold on to their money for a certain period of time, but it does not change what they owe in taxes. Whether they withhold 15%, 10%, or even 0%, it does not change the tax that they're going to owe. It changes how much they have to withhold at the closing and how much the IRS holds on to until either we do a withholding certificate or file a tax return.
They have to buy the next house.
And it happens all the time, cash, right? And I've seen major situations where the currency rates are really out of whack during that period of time. And they're trying, not to have to bring in more money for the life of them. And so it can play a factor. Right now, and we'll talk about when we get to COVID delays, we don't got much options right now, guys. In the past, we've had some other options of things we can do. Heck, guys, I've seen times where they actually can pull, Canadians with TD, RBC and stuff like that, they can pull mortgages, right? I've seen where they've had to come to the table. Right? They've got to come to the table with $50,000 to $100,000 just to make the deal close because there was 15% being withheld and being sent to the IRS. So it's definitely something you have to pay attention to. And obviously, the sooner, the better, right? We get a lot of fire drills with this. All right, so how do we get the money back? So now we've talked about the fact that it is a withholding tax. It's not a tax. Withholding. It's not a tax, right? So how do we get that withholding money back? Option one is just to wait and file a tax return, okay? So if you close a house today, you would have to wait until February of 2023 in order to file a tax return and then get your money back or whatever difference of the money back at that point in time. The other option is to file what's called a withholding certificate. Excuse me. So let's say hypothetically that in February of this year, a foreigner sold their property. Well, they'd have to wait a whole year to be able to file a tax return and get their portion of that money back. So the IRS is giving us this ability of doing what's called a withholding certificate. We're going to go in more details where we can basically tell the IRS, okay, I get the fact that I need to do 15%, but here's really what the profit is. Here's what I bought it for, here's all the improvements, here's what the profit is, and the maximum I could have to pay on that is 20%. So go ahead and take the difference between the two and give it back to me quicker. And in the past, that's taken about 60 to 90 days to do. We're going to get into COVID. I think we've done one withholding certificate this year because they're so far backed up, okay? But it is an option. I want to make sure to teach you because I believe next year it'll be a tool we'll start using again because the IRS should be back on track or at least way more closer than they have been. And then the third option is to do a 1031 exchange, okay? Now, 1031 exchanges, a couple caveats to that. One, it's got to be investment property, right? So there has to be a need, really income or the intent of buying and selling it for income purposes. And then you have to buy another house, which is income producing. Really, we're talking rentals, right? For practicality. There are some other ways of doing it, but it can't be the primary home. It can't be this, the home that they stay in there 6 months out of the year. It's got to be for investment. But it is a really good tool to defer capital gains where they can sell this one, buy another one. Unfortunately, it's got to be when 1031, two things to note about that. One, there's a lot of rules to it, right? 30 days, 60-day identification and stuff like that. And it has to go from closing to the 1031 exchange person. Okay, so I get a lot of people that they've closed on the house and they're like, hey, I want to do 1031. No, game's over. Can't do it anymore. You don't have a choice. So make sure you do it before. Yes?
Say their intention is to do a 1031 exchange and make the investment property a rental property. How long does it have to be a rental property before they can change their mind and say, oh, I want this to be my primary residence?
You're talking about on the backside of the 1031 exchange, basically? Yeah. So the safe harbor used to be 1 year. I'll also argue 1 year because I think I can get away with that. But the true safe harbor right now from the IRS is 2 years. Facts and circumstances, though, excluding. So there's a bunch of different reasons why you can convert it back to your primary that allow you to not have any problems. But we had one client of ours. I've had 3 audits in the 15 years I've been doing this, true audits anyways. And one of them, I told him that he was going to get audited if he kept doing what he was doing with 1031 exchanges because he kept turning them. And I said, look, you're going to get audited. And sure enough, he did. So it is something that they pay attention to, that you want to see it on the tax return for multiple years.
Well, no, is this a U.S. only thing? So
No, it's both.
Oh, so they're going to move back to Europe, they can do a 1031 exchange?
Yeah, if it's an investment property, right? Let's say they have a rental here, right? And they are going to sell it. They can do a 1031 exchange, buy another rental. And they don't even have to spend 1 day in the United States, right? You can have investments here without even living
But
here.
I'm saying, no, they're selling their house in Naples and then they're going to move back to the UK.
Sure.
I didn't know 1031 was.
It's not an option unless it was income producing. So it would have been a rental. The selling of the home should have been a rental. So if it was their personal or their vacation, it doesn't qualify for the 1031 to even start with. Okay? Yes?
Old Republic Exchange just told me recently that doing an exchange through a 1031 exchange doesn't really bypass the FIRPTA withhold.
It can. You can do the FIRPTA, you can do the withholding certificate to show that there was no that the money's not happening, the money's not moving. It's doing a 1031 exchange, and you can get it. And we can do that earlier too.
The certificate right when you have a contract and get it.
Yeah. So here's one of the problems. Well, let me move forward and I'll talk to you about that. So let's talk about option one, okay? First one is filing a tax return. And we've gone into that in detail already, right? You got to wait almost the full year or however long it is, okay? And we normally get our money back within 30 to 60 days. That's getting a lot better, guys, okay? We can e-file and our tax returns, and especially at our firm, we have found what we feel like is the magic sauce of how to attach the right things and put the right notes in there that they go through quickly. And we're seeing some of our clients getting their refunds within 2 weeks. for filing some of these. So it's getting much better, and I expect it to continue to get better. It's everything up to the tax return that you've got to get done right in order for that to happen. But once that happens, we're seeing that it's good. And then the amount refunded is based on a bunch of different factors, okay? And we're going to go into a little bit of it later, but how title is held, right? If it's individually versus in a corporation or a foreign corporation can change the tax rates. Do they have other U.S. income? Because that changes some things. Length the property was held, right? Normally it's over a year and you get capital gains, but if it's under, you don't. And then obviously the amount of the gain, right? So we know we're withholding 15% based on the gross price, but that's not what we're getting taxed on. We're getting taxed on based on the gain. So just because it's a $2 million property and we're withholding $300,000, they may pay zero in taxes and get the full $300 back. So it's based on the gain or the profit, not based on the gross price or the withholding. Okay, now withholding certificate, okay? And we're going to get into when we talk about COVID delays. We are, like I said earlier, we have not been doing withholding certificates this year. The reason why is withholding certificates, we are still getting some back from 2021, right? End of 20, even 21, they're just now finishing processing it. It's been a nightmare with COVID, especially within the IRS and especially within this department. So we have not filed any this year because we don't believe it makes any sense. They've been getting stuck. Heck, there was a rumor that, well, not a rumor, there was this thing that they said that they had multiple rooms of mail stacked up 4 feet that they had not touched yet, okay? You also read some stuff that the IRS had space issues and process issues. They did something like 2 trillion pieces of paper they just shredded and didn't enter into their systems. They are trying to figure out a way to get back. I was hoping they were just going to start rubber stamping stuff because we have been dealing with them nonstop for the last 2 years and it's been painful. Instead, what they did is they hired 6,000 new people, okay? So they hired 6,000 people. It wasn't part, the Build Better Back plan had 6,000 auditors that they were trying to hire. That's not that. It's 6,000 people that they've brought in just to deal with the backlog. So we are hoping by the end of this year, the backlog is going to be gone with the IRS and things will get back to normal because it has been a nightmare. But what it used to be was 45 to 90 days. Okay, so if you did a withholding certificate, you could get the majority of your money back within 45 to 90 days. So back to that example of $1 million, $150,000 withheld. Let's say he bought it for 1.1. Right? That means he has no gain. That means he can get all his money back. But if he sold in February, he'd have to wait till February of the next year to file a tax return and get that money back. A withholding certificate gives me the ability to send documentation to the IRS proving that there was no gain or what the gain was, and then you pay the maximum tax, or you calculate what the maximum tax is for that, and the difference you get refunded back. So, and it took 45, 90 days. So normally, all the way up until like July, maybe August, we did withholding certificates for clients, because they wanted their money back as soon as possible. Now we're in the situation where because it's taking 8 months, 12 months to do it, it doesn't make any sense to do the withholding certificate. There are some unique situations we'll talk about, but for the most part, it doesn't make any sense. And then again, the calculation is basically what they do is they say, okay, if it's over a year, you've owned the property for over the year, you take what you bought it for, plus all the improvements, and create what's called basis, and then what you're selling it, the difference between the two is the gain. Once you get the gain, the maximum tax rate for capital gains over a year, owning it over a year, is 20%. So we basically multiply that number by 20%, and that's what they're gonna keep, and the rest gets refunded to you. Okay, so let's do a real world example here. So let's assume that we are selling a property for $400,000, okay? And we bought it for $275,000. We had $30,000 of improvements, and let's say the closing costs are 6% or $24,000. Your gain would be $71,000, okay? That's basically the 400 minus the 275 minus the 30 minus the 24. Okay, so therefore, $60,000, okay, so now we're going back to the FIRPTA, 15% of the gross, right, 15% of the 400,000. So at withholding, or at closing, they're gonna withhold $60,000, okay? And what's nice about the withholding certificate is the money stays with the title company, okay, with the escrow agent. So we don't send the money to the IRS, okay, which once it gets to the IRS, it's a whole nother ball of wax. So withholding certificates, not only do we get back quicker, also we maintain the money. We hold on to the money and control the money. So the money, that $60,000, would stay in escrow with the title company at time of closing. Then we would file a withholding certificate proving that the gain was only $71,000, okay? So basically, if you kind of look down here, we would show, okay, IRS, you have $60,000, well, you should be getting $60,000 from me, 15%. But I've proved to you that the gain is $71,000, that the maximum tax rate is 20%, so therefore the maximum I could owe in taxes is $14,200 on the sale of this property. That is the maximum I can owe. Therefore, give me $45,800 back. Okay? So again, back in pre-COVID times, we would go ahead and submit this document at closing. Okay? We like to do it closer to closing because I know the numbers change up until basically a day or two before, so we normally like to wait to get closer. But when we get to the point, we send it in. 45 days later, we were getting a document back from the IRS that said, hey, we've reduced your withholding to $14,200. We give that to the title company. Title company wires the $45,800 to the client and sends the $14,200 to the IRS. Okay? It's a great tool. It is what we love doing. This is where I make my money and how we service the clients of getting their money back. Again, have not been able to do it much this year, but are expecting it to come back next year, especially at the beginning of next year. Yes?
Can they also reduce the withholding by presenting a receipt when they did remodeling?
Absolutely. So in here you can see we said $30,000 of improvements, right, in this example. So in order for us to take that $30,000, we have to prove to the IRS, the FIRPTA, that the receipts. And so we normally do a Excel summary with all the receipts behind it. Okay, and every once in a while, and they're really funny too. They'll like to exclude like a $400 thing. Out of $30,000, it'll be $400. So instead of them getting back $45,800, they'll get $45,750. It's really crazy. They're really wonky there. They really with fine-tooth comb go through it. Now, when we do the tax return, a whole different ball of wax. They don't look at any of the documents. You don't have to submit any of the documents. So a lot of times I'll have a client that may have put in $40,000 of improvements but can't find the $10,000 receipt. Knows it's somewhere but can't find it. Look, let's just do the withholding certificate based on this. When we do the tax return, we can do the full $40,000. Okay? So they're a lot more stringent at the withholding certificate level. Okay, and then we will file a tax return at the end of the year and get the remaining $14,200 or some portion of that back at that point in time. Okay, so 1031 exchange, we went through a lot of this, but just to kind of follow up, so you have to buy another property, and they can use it to basically defer the withholding, but they've got to buy another property. Again, because two things. One, it has to go directly to the 1031 exchange person, and two, it has to be an independent party doing it. So I cannot do 1031 exchanges for any of my tax clients or any of my foreign clients. So we just don't do them, period. There's a couple good people here in town that do it. It's all some national firms, but we can't do it. Okay, so what we have done. So back to my big thing that I like to say. It is a withholding, it is not a tax, right? So what we've done is we've created our website, okay, or we've created a calculator on our website as a free tool for everyone to use, but mostly real estate agents and title companies, okay? And basically what we want you guys to be able to do is we want you have a listing appointment and you know it's a foreigner. We want you to be able to go prepared with some good information of, hey, if you sell at this point, I can see in Collier County you bought here, may not know improvements and some of the other details, but rough math, this is a more accurate understanding of how much is going to actually be taxed and what the tax is going to be. So if you go to our website, thefirptagroup.com, okay, and you click on the FIRPTA calculator, it'll bring up this nice little page here, okay? If you scroll down just a little bit and click on the icon, it'll bring you up and start asking you some questions. So the first question is, are you a buyer or seller? So obviously we're going to put seller because that's the only time FIRPTA is required, is from a seller standpoint. Are you a resident or non-resident alien? We're going to say that we're a non-resident. Do you have an ITI number? In this situation, we're going to say no. And so we hit next there. And then what is the sales price of the property? So based on our example before, we're going to say that we're selling it for $400,000. Will the buyer sign the affidavit? We're going to say no. And it pops up and it'll tell you that the withholding is 15%. Now, if the buyer was signing it, it would have been 10%. Then it says, do you own the property individually or husband and wife? We're going to go and say individual and spouse. Did you ever rent it? We're going to say no, because if it rented, it's a whole different calculation. Do you have any other U.S. source income? We're going to say no, because we're assuming they're just selling the property. And did you buy the property over a year ago? Most of the time that's yes, so we're going to hit that. And what did we buy it for? So again, we're going to put in that $275,000 number of what we bought it for. Did you make any major repairs? We're going to say yes, because we've already talked to the client. We know that they did $30,000 worth of repairs. And we hit next. Okay, and then what is the range for the sales agents, right? So what's the percentage? And in this case, we're going to say 6%, okay? And basically what we're doing is we're trying to calculate closing costs. And obviously the real estate commission is the biggest part of the closing costs. So we want to have a general idea. And then what that does is it actually spits out two different forms, okay? The first form, it does an explanation, and we're going to go over this in more detail, okay? First form shows an explanation of what FIRPTA is and the actual withholding requirements. And then the second page is actually updated with real numbers based on what you entered into the system. So if you go to the next page in your thing, I've actually given you a sample of what comes out of the website, okay? And the first page basically talks about, how we offer an easy and seamless way of doing it. It tells you what FIRPTA is, what it stands for, and all that type of stuff. It gives you a chart of the withholding with the buyer's information, all that type of stuff, and just gives something that you can give the client to give them a general information of what FIRPTA is. But again, what we really care about is this second page, the page that drops in the real numbers, okay? So this brings in the real numbers, and so the original purchase price was $275,000. Commission's going to be $24,000. Improvements are zero in this one. I don't know why that's like that. It must be from an old one. And so therefore the basis. Now when we entered it in, I apologize guys, it was $30,000, so that should be on there. And it does actually work properly. I just don't know. For some reason we have an old slide in here. So if the sales price is $400,000 and the basis is $329,000, you'll see that that gain is back to that $71,000, okay? So we have a gain of $71,000. Now, the next line starts doing the actual calculations. So now, if I have FIRPTA withholding at 15%, we're going to withhold $60,000. If you file a withholding certificate within 60 to 90 days, you'll get back $45,800. Then, when you file a U.S. tax return in February of 2021, this is an old slide, you will get back $14,200. Total tax paid, zero. Okay? So, this is a really good tool to go to a foreigner who has been looking online and looking at different things for the $400,000, thinking that they're going to pay taxes of $60,000, right? Because again, they think it's a tax, not a withholding. You can go in there and with some simple math and doing some simple entry, print out. And you can play with this as many times as you want. Put different numbers in based on certain sale prices and stuff, and it will tell you very accurately what they're going to owe in taxes, and with the withholding certificate versus not a withholding certificate, when they'll get that money back and how that works, okay? It also will show the price, our prices for doing the work. I don't like hiding my prices. I'm gonna tell you right up, it's basically $500 per person for ITIN, $500 per person for tax return, and $1,000 for the withholding certificate. Very straight, clean cut. Every once in a while with foreign corporations, it's a little different, but for the most part, that's what it is. So it's a really good tool. Now, why? Why is it $0, okay? And I don't have a slide on this because I don't want you guys to get too much into taxation and the numbers change constantly. But there is a rule, most people don't realize, is that there are 3 versions of capital gains tax, okay? I'm sorry, 3 rates for capital gains. There is a $0 rate for capital gains, okay? If you have 0 it's just over $41,000 right now. If you have $0 to $41,000 of total income, that's capital gains, you will pay $0 in taxes. Now, the problem is for most US citizens or most even resident aliens that are making money here, we eat up that $40,000 right away. So if I have a W-2 job that makes $50,000, well, I've already made $50,000. Now my capital gains start at 15%. Once you get over roughly 400,000, it turns to 20%. It's a little different than that for married couples, but basically 400,000, it turns to 20%. But so foreigners really get to take advantage of this, because if they have no other source income, which most foreigners do not have other source income, the first $40,000+ of capital gains, they pay $0 in taxes for. So now you have married with spouse, right? Individual with spouse. Now I get $80,000. Actually, it's like $84,000 of free capital gains. So what I always tell my agents, and especially my foreign sellers, is that the IRS does a really good job of taxation for foreigners selling properties. The first 80,000 married couple is at 0%. The next 400,000 rough math is at 15%. And then it maxes out at 20%. So it's actually a pretty good rate, especially compared to the other countries for taxation. So they do a good job. They just make you jump through a bunch of hoops to do it, right? We've got to get an ITIN number. We've got to either file a withholding certificate and or the tax return at the end of the year. So there's definitely some stuff you have to do, but at the end of the day, it's a really, they do a real good job at the actual taxation. So feel free to go to the website and use this as often as, as much as you guys want to. It's a really good tool to explain to the foreigner really what's going on with the dollars and cents so they can see it and really understand it. Any questions on this? Okay, so let's talk about our favorite topic of COVID delays. All right, guys. So my life has become drastically more difficult due to COVID. The IRS, I cannot tell you how many mistakes they have made, and I can't tell you how many issues we've had with processing and stuff. The IRS has mail that they have not opened from arguably 8, 9, 10 to almost a year, okay? The most recent one that we've just dealt with was people that did their last payment, their last quarterly payment, did not get registered in the system before they filed the tax returns before April. And so a whole bunch of people were getting letters from the IRS saying they owed another $2,000, another $5,000, another $10,000 because of the fact that they didn't do that. Got another one for you that's really fun. If you are married and the primary Social Security number on the tax return, let's say it's the husband in this case, right? And the spouse goes online and makes an IRS payment through the IRS website underneath her Social Security number and gets a nice confirmation number and everything else like that. The IRS has not figured out a way to make that move over and everything work right, and you'll get a letter saying that you owe another $5,000 because they didn't register that $5,000 payment. They are a hot mess. They do not know what to do. Another one we had that was really interesting is we're talking about FIRPTA. Title companies, right? Law firms were sending money in for this withholding, right? The IRS was not able to get to that for 8 months to a year. So the cash was, one, staying in the title company or the escrow account, which is a major pain in the butt for accounting purposes because it didn't cash for months and months and months. But a lot of escrow companies have a void upon 90 days clause on their checks. So after 90 days, the checks are considered void because they don't want to have, it's a good policy actually, a good accounting policy to have. But in this situation, it sat in the IRS vault or room for 9 months before they ever tried to cash it. They tried to cash it, it bounces, it goes back to the buyer saying that the buyer is now having to pay penalties and interest and everything else because of the fact that it did. Then they had to send another one. And if they didn't, and because they didn't realize at first what was going on, and they sent another one, and again, it took another 6 months for them to cash it, void again, et cetera. So there's been a lot of issues with the IRS, a lot of stuff we're dealing with nonstop. We've just got to deal with it, unfortunately, right now. From a foreign standpoint, what we're looking at, right, is that processing time before COVID was 30 days, sometimes even less. They've actually gotten this a lot more under control. I don't think we have any backdated applications that haven't been processed, and they're running about 60 days and getting better all the time. So the ITIN application aspect has gotten better. And I think they started there first just because of the fact that you can't do anything if you don't have the ITIN. Now, the withholding certificate, which we've been talking a lot about, before was 45 to 90 days. And the only reason why I say 9 days, it's supposed to be 45 to 60, but we were seeing that the IRS was behind on these even before COVID hit. And they were running closer to 90 days. Now, the IRS will not even tell us, okay? In the past, they've always told us what the time frame was, and a lot of times they did that because the title companies and law firms wanted to have a range so that they knew when to start paying attention to the money. But now they won't even give us a time frame, okay? If you go on there, they have some announcements every once in a while of where they've processed through, and so it gives us a little bit, and it's looking like it's around 8 months right now. Okay, so as you can see, it would make no sense to do a withholding certificate right now because we wouldn't get it until March or April of next year, and therefore it would be better just to do the tax return and not have to deal with that. So we are hoping, cross fingers, that by the beginning of next year that they will be back on track because nobody should be filing withholding certificates right now with the backlog. So hopefully they're bringing in more people. We know they're bringing in more people, plus the fact that they don't have any current ones really coming in. They should be able to get back on track, and we're hoping next year that everything will be closer to normal anyways. Any questions on COVID updates? Yes?
They already have a social security number, but they still need to do withholding.
Well, so I get that a lot too, right? So we talked about the green card earlier. They had the green card at one point in time, and most likely they got the social security number because of the green card, right? In theory, they could have been a dual citizen, got social security card, and then not become. So really what it comes down to is, so my answer to your question is going to be just because they have a social security number does not mean that they're not subject to FIRPTA, right? They can still be subject to FIRPTA if they are a non-resident. Right? And therefore the social security number in theory is just not good anymore because they don't have the green card, et cetera. Realistically, what it comes down to is this, is when every single closing that you guys do, okay, the law firm and the title company has a affidavit that needs to be signed by every single person. And it's weird the way it's written, but it says that I am not a non-resident alien, okay? So, right? So think that through for a second, right? A non-resident alien, right, is subject to FIRPTA, right? If I am not a non-resident alien, that means I can be either a U.S. citizen, it means I can be a resident alien, it means I can be a green card holder, right? So as long as the seller is signing that affidavit that says that they are not a non-resident alien, then for the most part, we've done our jobs, right? The title company's done their job and everything's going. But we go through to educate you, and it really means that to be not a non-resident, you either have to be a U.S. citizen, you have to have a green card, right? Not a social security number, a green card, or you have to pass the presence test of being here over 183 days. But again, people are like, oh, well, then I'll just stay 190 days, I won't be subject to FIRPTA. True, you won't have 15% withholding, but you're gonna have to file a tax return at the end of that year showing all your worldwide income, including the income from this property. So you get stuck in that situation. Yep.
My client was overseas, and because of COVID, so they haven't been back for several years. But due to the COVID, they can't travel internationally, so their green card expired. Should they renew their green card first, then sell the property, or?
So here's the thing, right? It's an old adage that you don't make investment decisions based on taxes, right? I'm going to do the same thing here and say that you don't make the decisions on the green card stuff based on just selling the home. And the reason why is that it's just a withholding. They're going to get the money back. So yes, don't get me wrong. If they're planning on getting their green card anyways and everything makes sense, sure, go ahead and wait. But here's the thing. In today's market, you could wait 3 months for the green card to get renewed and the value of the property may go down $30,000. Obviously, that doesn't make any sense to do that when it's just a withholding for the tax. You just lost $30,000 to try to avoid the situation of withholding, not tax. Again, and we got to get our minds wrapped around it. It's not a tax. It's just a withholding of cash. So much better to let the IRS hold on to your money than to lose $30,000, arguably. But the property price could go up. So it's one of those situations you got to deal. But if they had their green card, they would not be subject to FIRPTA. If they didn't have their green card, they would be subject to FIRPTA. Correct. And I'm sure we're going to have a lot of weirdness things when people start coming back, right? More so than they are now, and start buying and selling again of these weird situations where my wife was out forever, I was here, you know, all that type of trapped COVID stuff.
When they want to use the cash to buy another property.
I know, and it makes a difference. But again, it just depends, right? I mean, you gotta, well, you don't have to. You can talk to finance people and stuff like that. But I always try to explain to them, listen, I understand that bringing it over, you're gonna have a conversion rate, taking it out of your company, it may get taxed, right? So we deal with some of that stuff, things like that. But losing $30,000 to $40,000 to wait for the process to do that, if you believe prices are doing this or going just slightly down, isn't worth it. So there's just a lot of variables involved in it. Anything else on this? Okay, so because of the COVID delays, we wanted to kind of talk through and show you guys the process of what happens here, okay? So when we actually do a FIRPTA deal, what actually happens from the movement of the papers and everything else. So if we are not doing a withholding certificate and the client already has an ITIN, okay? It's by far the simplest thing, okay? And we get involved a lot of times because we want to do it right, but also the law firm or the title company can just do it themselves, because all you have to do is fill out the 8288A, right? It's actually 8288 and 8288A, attach a check to it, send it to the IRS. That's all the title company has to do, right? That's all they have to do at that end. Now, what ends up happening in the background is it goes to the IRS has to process that money and everything, and then they send back what's called a 8288A copy B, okay? They stamp it and they send it back to us, or actually the client, and then once we get that back, we're able to prepare a tax return and everything's fine and easy, okay? The next option, which we liked a lot, I'm sorry, not this one. This is the no withholding certificate without an ITIN, okay? Now, we hated this, okay? And we've been doing it, unfortunately, a lot now because of COVID. But we hated this process, and you'll see why. Because what happens is that we have to do an 8288A and send the money to the IRS, okay? But on that document, it requires you to have a taxpayer identification number, or in this case, an ITIN for the sellers, okay? But the problem is we cannot get that ITIN number in enough time to be able to do the closing a lot of times. So we have to send that 8288 into the IRS without an ITIN number. At the same time, we apply for the ITIN number. So you can see that first line is we're sending the money and the document to the FIRPTA department in Ogden. At the same time, we're preparing the ITIN application and we're sending it to Austin, okay? Both of this is happening at the same time. Now, what happens is, in Ogden, at the FIRPTA department, they get the 8288 and they see that there's no ITIN number on it. So they immediately send out a letter stating, hey, we need an ITIN number to actually apply this money properly. And so what happens is the money goes into an unnamed account, basically, because it doesn't have an ITIN number, and sits there in Ogden, okay? IRS letter comes back saying it. In the meantime, we've gotten the ITIN letter, and we're just waiting for the letter from Ogden saying that we don't have it. But now we have to send a letter back to them telling them what the actual ITIN is. Now, they've got to find the old 8288A. They've got to find where that cash is sitting and everything else, and then they have to code it to now this ITIN, or husband-wife ITIN, that we just gave them, okay? I can't tell you how many times that process does not work properly, okay? Yeah, go figure, right? The IRS making a mistake there, yes.
And the 8288A usually requires the buyer's social security number.
1,000,000% does.
And also the legal description, so they do have, because this is actually the responsibility of the buyer.
1,000,000,000% it is.
It's crazy, but it's a responsibility.
Realistically, though, it's the title company's responsibility, right? I mean, that's really, there's what's called a withholding agent, and normally the title company is the withholding agent. Actually, the escrow part of the title company is the withholding agent. But yes, this is true. You need both the buyer's and seller's identification numbers. If you do not have one or the other, they will send a letter. So we've had plenty of times where the seller either has an ITIN number or is applying for one, and the buyers either A, are foreign and don't have one, so they have to apply as well, or B, they are a U.S. citizen and they have been instructed by legal counsel or just decide by themselves they're not going to give it, right? They're just being one of those things. Okay, Not my responsibility, not the title company's responsibility, not the seller's responsibility. We will send the 8288 in without the buyer's information, without the buyer's social security numbers in there, and they will get a letter from the IRS, just like the sellers will, that say that we need your social security numbers. And the IRS will then hound them for them and start getting penalties.
Belong to the buyer because it's easier to get them.
Huh?
It's easier at the Internal Revenue to get to the buyer than to the seller.
Yeah, but that's not the right. In your situation, it would go to the buyer. In this situation, where the sellers need the ITN, the letter goes to the seller. Okay, but every single FIRPTA withholding certificate, ITN, anything I do, I put a CO address as me as well on there so that I get it, okay? I work for you guys, I work for the title companies and the sellers. I need to make this process work, and I can't tell you, actually Christina and me were talking about a situation in which the withholding certificate went out to the seller and the buyer, but never found its way back to the title company and the law firm. Right? And so they just didn't even know about it. And it created a whole whirlwind of problems and stuff like that. So we make sure we get copies of everything mailed from the IRS. It's one of the abilities of me being a CAA. I can sign the tax return with my address, and they send me all the information so I can deal with it. They also send it to both to the seller and a lot of times, sometimes to the buyer as well. But I get copied on it because I know how to deal with it, and I'll make sure that it gets to where it needs to be. So back to kind of this example, right? So we get the letter back from the IRS, right? We then send a letter back to them saying, hey, here's the 8288, copy of the 8288, and here's the ITN numbers. We now have it. Again, they've got to find it on the shelf. They've got to assign the number, all that type of stuff. And then they'll eventually send us the 8288B, copy stamp B, that gives us the ability to do the tax return. Now, again, like I said, this part right here causes all sorts of headaches. All sorts of headaches. Unfortunately, this is the world we live in right now with the IRS because we can't do withholding certificates because it takes too long. So we've just having to be able to deal with this. We've had to put in a whole bunch of stuff to try to find out, try to feel out what their time frame is so we can start, calling them, hounding them. The problem is just you call them up and say, why haven't I received this? And they're just going to give you the same excuse every time. COVID delays, COVID delays, COVID delays. So it's been a pain, but again, that's our job. That's what we do. We stay on top of them, and we keep moving this process forward as much as we can. And then the last one is the withholding certificate process. Now again, if this was working properly, this is the process that I like the most and is normally the cleanest and gets the client their money back quicker, right? Again, COVID delays now, but normally gets the money back quicker, and the process works a whole lot smoother. Because what happens is in this process, I take the ITIN application and the withholding application and I stack them, okay? I put the ITIN on top and the withholding below, and I send both of those to Austin first. I send it to Austin. They then take the top level of the ITIN, they process it, give an ITIN number and ship that ITIN number mail back to us, but then they also put that ITIN number on the withholding certificate application, and they forward it to Ogden. Then they process the withholding certificate, they send it back to us. We get the withholding certificate, whatever portion of the money gets refunded. We now can send them the remaining dollar amount. In that example, it was 14 grand that got sent back, but we already have the ITIN, so it just goes and it gets properly done. So this whole process, this withholding certificate process, when we get back to normal, is what we normally suggest for a foreigner to do because it's the simplest, it has the least problems, and it gets them their money back quicker normally, right? In today's days, it's been a little bit different. So, all right, guys, that is all I have. Listen, again. Sure. Yeah. Listen, again, from a standpoint of clients and stuff, my big thing that I tell you guys, right, two things. One is it's not a tax, it's a withholding, right? Make sure to tell your clients that. And then two, I normally suggest, because of the ITIN stuff, is make sure that they see somebody before they leave the United States, right? I can't tell you how much more work it is on their end if they don't. If they can come in, it's a 15-minute, heck, I've even had 5 minutes where they just come in, show me the password, and leave, and we can do everything else remotely. But we definitely want to make sure that you do those type of things. We're always available. We don't charge for consultation. There's a couple other good firms in town that do it as well. We got one more set of announcements real quick, so I'm going to bring Brett up. But do I have any other questions right now? Yes.
When people are due to visa
Mm-hmm.
or immigration, investment immigration visa, their cases are pending because USCIS is taking forever, and are they still?
If visas don't change really anything, right? So, microphone.
So how many have their CIPS in here? How many plan on taking the class and getting it? CIPS is Certified International Property Specialist. That's what the sheets are that are on the page there. And if you have any questions, we'll hang around a little bit and we can answer the questions about the CIPS Institute. Now, how many of you are totally confused? This is very, very complicated. And we have the same thing when we have Christina or we have our attorneys and everything. So what this tells you is, listen, as realtors, we are not accountants. We are not supposed to be giving financial advice. We are not supposed to work outside of our expertise. So what we do is we build a team. That's what the CIPS Institute will teach you. How to put that team together, how to have an attorney that works with you, how to have someone from FIRPTA that works with you. And those are the reasons that you want to earn your CIPS. It is a violation of the code of ethics to sell real estate to a foreigner without the proper education. And that's why we put these events on as the global committee here at Neighbor. So I want to thank you all for coming. And Christina, did you need to say anything else? We want to thank you for breakfast.
Thank you. I can't really add anything to what BJ said. He said it all. He always does.
Good deal. He's always my go-to guy for it. Makes things real easy. And we just had Sam Sodden here for a little while too. Great, another attorney that's in the neighborhood. Christina does a phenomenal job if you're working with foreign people, especially those Canadians, which is more than 50% of Naples' foreign direct investment in real estate comes from Canada. So it's a good group to keep in touch with, and stay tuned and watch for the next event that the Global Committee will be putting on. Thank you, BJ.